Tracey Hanbury, one of the co-founders of the National Landlord Investment Show. Welcome to the latest edition of Landlord Investor Hour. I'm delighted to be on location today in London with Pauzible to meet the co-founders of a very exciting product, which is Pauzible. So I would like to introduce you first of all to Prateek, who will tell us a little bit about Pauzible and what it has to offer landlords.
Hi, so thanks very much for having us on the show, me and Rajesh. So we at Pauzible, we aim to be innovators in the home financing space. Our aim is to help existing and prospective property owners, be it homeowners or be it landlords, find quicker, cheaper and simpler solutions for the financing needs. By doing this, we aim to help them get onto the property ladder. And for those already on the property ladder, whether it be landlords or whether it be homeowners, for help them to stay on the property ladder for the future and, prevent their homes from effectively being sold in the current, economic environment that we're in.
Okay, fantastic. So, Prateek, what services and products do you offer?
Yeah, so what we obviously hope for is that everybody in this universe, I would imagine, barring a few, like to own property, whether it's for property that you want to own to live in, or whether it's landlords who want to own property for a particular purpose, to obviously provide a home to their tenants and to generate and grow their wealth through this process. What we've seen is, looking at parallels in the US, for example, that the government has a number of initiatives over there which help property owners in the market to stay in their property. And there are government-sponsored enterprises that are intended to transfer risk from lenders to the end investors. Now, unfortunately, we don't have that particular situation in the UK. We don't have such robust systems existing in the UK at the moment. So we have to find other solutions which can help people find, cheaper, simpler and sustainable ways of financing their properties. Unfortunately, in the current environment, mortgage rates are very high, and we haven't seen a lot of innovation in the property market yet. So this is where we think, we as Pauzible can come in. We have, decades of investments in the financial markets. We have been involved in the financial markets and in securities and in products that are linked to mortgages. And we felt that with the current situation with higher mortgage rates, we could provide a solution to existing and prospective homeowners, such that we could develop and bring out products that can make this financing potentially cheaper, potentially more easier to access. And we felt it was the need of the hour in terms of where we could come in.
In terms of the state of industry, what would you say is the current landscape of the home financing market currently?
Sure. So in the UK, what I feel is that we have not grown a lot in terms of product development since the, let's say, 1990s or 2000s. We have the market which is largely dominated by the big six lenders as far as the home mortgaging market is concerned. And if you include the likes of Virgin Money, Clydesdale, Yorkshire Bank, TSB Bank, we probably these are probably the top 10 lenders. They make up 83% of the home mortgaging market. If you look at the buy-to-let sector, there is a bit more, let's say, competition. There are, of course, the likes of some specialist lenders like Paragon or Kensington. And again, here the top 10 lenders make up only 70% of the market, but that's still a significant chunk. Unfortunately, despite all of this, there hasn't been that much of innovation which has happened here. And the current lending environment, or the current economic environment, we've seen the Bank of England raise rates 14 consecutive times since 2021. And we've now settled at a base rate which is 5.25%. The market was sort of expecting that rates would have fallen They did fall from the highs of July last year when they were 6.5%. They fell down a bit towards December and January, at which time the expectation was that there would be 6 rate cuts during the course of 2024. We're now sitting here in June and we haven't seen a single one. And the market's expecting potentially maybe 1 rate cut towards the end of the year, maybe 2. So what we as homeowners should wisen up to is the fact that the rate cuts are probably not going to come so soon, and that we need to find more effective solutions for our home financing needs, and that is what the sort of UK property market needs at the moment.
Okay, great. And then what type of challenges does your industry need to overcome and reach these goals?
So yes, I mean we've seen as far as the let's say the buy-to-let landlord market is concerned, we've seen landlords squeezed on quite a few fronts. The current inflationary environment has impacted not only the cost of maintaining their home, but obviously the cost of financing the home through the mortgage rates, and the inability of the landlords to some extent because of market constraints to be able to increase their rents, because obviously if they increase their rents too much, their tenants might leave. The other constraint that we have is the market is not very conducive or hasn't had systems in place to allow for long-term fixed rates in place. So all of this makes it a bit more difficult for landlords, and they're facing significant financial strain. The second thing that we think is sort of lacking in the market and needs a bit of impetus is the fact that there needs to be technological innovations, and technological innovations which can hopefully impact the underwriting journey, make it much quicker, much more robust, and improve the customer experience significantly. And thirdly, what we think is sort of lacking is the fact that we have a lot of the schemes and a lot of the policies that are directed are aimed at homeowners getting onto the property market. But once someone owns a property, be it a property, a landlord or a homeowner, we find that the policies and initiatives are lacking. So you are left to navigate the world on your own once you already own the property. So in that respect, we feel that there can be more robust policies and systems developed which can help existing homeowners stay in their place, existing property owners stay in their place, and for landlords to not be forced to sell the properties in a market which is not really conducive to them. So such that they can continue to service their tenants, and they can hopefully gain and prosper in the future. I mean, not be in the immediate short term, but in the future that they can prosper through their continued ownership of properties. Okay,
great. I mean, what sort of impact do you think Pauzible, can have on the industry?
So Pauzible, we have a lot of technical expertise, a lot of technological expertise as well. So we think we can impact the market by bringing our innovation focus and through our understanding of the market. We have a fairly good understanding of what investors need. And as a result, we think we can develop products which can satisfy the pressing needs of landlords, as well as make sure that these are able to satisfy the demands that our investors place on us. Secondly, we think Pauzible can bring technological innovation to the market, and then hopefully reinvent the underwriting standards that the market follows, such that we can provide more streamlined solutions, reduce costs, and potentially provide customers with a much faster and quicker customer experience. And sort of most importantly, I think Pauzible aims to take benefit from the equity that people own in their homes. So one of the solutions that we have aims for landlords to receive financing by effectively doing a future partial equity transfer. So it doesn't rely on debt. And we feel that this solution can be innovative and be sustainable because it is something that you own. The equity in your home is already something that you own.
Yeah.
And all that you're doing is giving away a small portion of it to the likes of Pauzible in return for getting financing. And that can continue to leave you in control of your property, but at the same time, benefiting from the long-term growth in the property prices and the appreciation that might give you. So we think that is an innovative solution for the market here.
Okay, great. Product comparison to alternatives. What are the alternative financing solutions available for home investors, landlords in the UK, to manage this situation?
Sure. So we have what we see in the market is that there are lots of debt solutions which are available to property owners. You can obviously you can max out on your credit card if that's the sort of easy solution that people have. You have solutions for you can take a personal loan, you can take a second charge mortgage potentially, and you can also take bridging loans. Now, among these, credit cards are probably the easiest to access once you've got your limit agreed with your lender. But at the same time, credit cards it's a double-edged sword. It's easy to access, but at the other end, it's a very expensive form of debt.
Of course, yeah.
So you would not want to get into a debt spiral by maxing out on a credit card and continuing to you obviously pay off your minimum amounts, but you need to be able to sustain that credit card debt. Personal loans are probably a bit easier, but obviously the amounts that you can borrow on these are also limited, whereas you might want to borrow more amounts of money or get more financing for yourself. Bridge loans are quick to disburse, but obviously come at a very expensive rate, and they are also very, very short term. So you get bridge loans for maybe 18 months to 2 years, and if you're not able to sustain those, then you could potentially lose your home. Among these, I would think potentially a second charge mortgage on your property is one of the methods, which I think is available to a lot of people, provided you've got enough equity in your home, and at the same time is not prohibitive in terms of costs. Obviously, it is another form of debt that you're taking on, but that is a solution. And if you're not able to take on any of these forms of debt because you're running out of, let's say, your affordability criteria, then obviously a lot of landlords are having to resort to selling their property, unfortunately, in an inopportune market where the market prices aren't great and it's sort of a down market at the moment. So obviously these solutions are available. Yes.
Okay, fantastic. Well, that's been the first half of the first co-founder, Prateek, and that's been really, really insightful. So thank you very much. And now I'd just like to welcome Rajesh onto Landlord Investor Hour, where I have the second set of questions that will help you guys. So welcome back to part 2 of Landlord Investor Hour here today with Pauzible. I'm now going to welcome Rajesh onto the show. Obviously we were talking with Prateek earlier on, so welcome Rajesh onto Landlord Investor Hour.
Thank you, Tracey.
You're very welcome, and it's just really, obviously Prateek covered off a lot about the background, the state of the industry, your product comparisons to alternatives. So now I've just got some questions for yourself that will obviously help our audience understand Pauzible and what you guys have to offer to the market. So really, why do you think the current solutions are not good enough in the current market?
Sure. So most of the current solutions have been structured around debt. So as we are going into a high debt cycle, we have had zero rates for a long time, and now there's been significant increases in rates. So to borrow even more is not a great idea. So what we feel is that, sure, for some people it might work, but it's not necessarily the right way to approach the market at the moment. And secondly, if you're selling part of your portfolio just to stay afloat, you're selling into a downturn.
Yeah.
So ideally, again, not a great way to address the problem. So that's why we feel the current solutions are not necessarily addressing the root of the problem.
Okay, fantastic. That makes perfect sense. So are you suggesting that debt is not really one of the feasible financing options?
Not at all. I think that has its place in your arsenal as a homeowner. And the primary charge that you have against your house is the cheapest form of financing that you can get. Problem starts where to fund, because the rates have gone up even on that. If you're using other more costlier methods like a credit card or bridging loans to service that cheap debt, that could lead to problems down the road. It's a slippery slope, so to speak. So that's where I feel there have to be alternate solutions. And yeah, sure, that has its part to play, but there has to be other solutions that do not make it even harder for landlords to service their obligations.
Okay. Now, obviously, we've had a lot about people resorting to selling their properties. Does this not help solve the problem, in your opinion?
Sure. I mean, if you have a portfolio landlord, one solution would be to sell part of your property portfolio. So if you sell a couple of portfolios, at the moment you're selling into a downturn, so you're likely not going to get the best price. And secondly, that also has some frictional costs, so to speak, whether it's estate agent fees or your capital gains being taxed and so on and so forth. So yeah, certainly some people are doing it to kind of keep the entire portfolio afloat. Is that the best solution? Probably not. If they want to kind of, the reason they're on the market in the first place is that they feel like over the long term property will appreciate and they'll get an income plus the appreciation of the back end. So ideally they want to keep hold of the portfolio and even add to it. And by selling and cutting it in the worst possible solution, it's not really a great time to do so.
Yeah, makes sense. So is it not a good thing for the rest of the market that landlords are having to sell?
I don't think so, because landlords, to my mind, are a critical part of the home ecosystem. So not everybody can either afford to or are inclined to own a house and maintain it. And landlords serve a need in the market for that rental market.
Yeah.
So I think it is definitely a critical part, and I don't think it's in anybody's interest to force landlords to sell long term, because all that will happen is rents will go up and there'll be even fewer properties for people to actually get hold of. So yeah, I don't think it's a great idea in the long term for landlords to sell. I think we should find solutions that work for everybody.
Yeah, I agree. I mean, obviously, we have got a huge housing crisis in the UK, and I agree. Sort of solutions to not selling is the way forward, which will only make it worse if people are selling. So what is it about really unlocking home equity that people might not be aware of, that landlords might not be aware of?
Sure. So if you have enough equity in the house, then there are two ways to access it. So you can take some more debt against it, more costly debt. It's not going to be as cheap as your primary mortgage. So sure, you can do, if you're in that situation where you're able to service those higher interest payments on a second charge or a bridge loan, sure, that can be one way of accessing that equity you built up. The other equity which Pauzible is bringing to the market, other solution we are bringing to the market, is a home equity solution, where an investor will invest in part of your property. So you get cash without having to pay huge monthly interest payments to us, and the interests are aligned. Both the investor and the landlord want eventually the house price to go up and participate in the upside. So the interests are shared in that sense, and it's cheaper for the landlord to kind of access cash immediately without having to go through an expensive payback and interest rate payment, and even stretch their affordability further on a monthly basis.
Yeah, okay, that makes sense. And I've also seen on your on the website as well, you've got a calculator and all the tools there that people can obviously, put their equations in and get some, get some figures back quite easily. I was having a little look at that today. Yeah. Fantastic. So really on to my next question. So your solution helps landlords continue to remain as owners. Why should landlords hold on to their property?
Landlords got into the property market with a long-term view. Obviously, they get a rental income, and eventually the expectation is property prices will rise. And it's a great way to invest your savings, in the sense that it's inflation-proof. Over a period of time, you expect the rents to go up with inflation and the property prices as well. So it's a great way to kind of invest your money, so to speak. So in that sense, for them, why would they sell now? They want to ideally find a way to kind of make that dream hold true going forward. So the way we have structured it is, sure, we are giving up a little bit of your property upside, but you still keep a majority of, typically 85% of your upside from here. So you get cash without expensive debt to repay, and you're giving a small portion of your upside and your property value. So that way it's a win-win situation, hopefully.
Okay, fantastic. I mean, just another question that sort of comes to my mind. Obviously, it's typically quite hard for this next generation to get onto the home, onto the property ladder. So a lot how it comes from, parents, relatives to help, get that next generation on the ladder. Is this something that Pauzible, to have some, to be able to take some equity out of the property, and then maybe invest that into another sort of, to start building a portfolio for
the next... It's a very good question, and certainly something on our minds as well, both from the perspective of helping some people get onto the ladder in the first place, which is proving harder and harder as time goes on. But also, eventually we aim to bring a suite of products to the market, addressing various needs. So the immediate problem we were trying to fix was people thought 2% was the average mortgage rate, and that's going to be true for life. Clearly hasn't been the case. So the immediate problem we're trying to fix is the mortgage rate increase and the cash flow problems. But you make a very good point there, and absolutely that's one of the things on our mind as well.
Okay, great.
How can we help them to kind of buy a second property for buy-to-let? Because some people also think it's a great time to invest if they have the dry powder, so to speak. So we can help them to take money out and invest in another house. Or like you say, if they want to help somebody else get on the ladder, then absolutely, why not?
Excellent. Yeah, that's perfect. I know that's on a lot of minds at the moment of of people. So really, I know we haven't got a looking glass, but we've got an election looming as well, which is always going to be very interesting. What is your view on the property market in the next year?
We feel that eventually mortgage rates will have to level. We're probably never going to see the old rates again, but at some point it'll stabilize, and we feel like the pent-up demand will prop up that property market again. So we don't expect a huge decline from next year. It'll probably increase, if anything, and eventually keep increasing with all the pent-up demand coming back once you can afford the property again. So nobody has a crystal ball, and we don't know what the election will bring, so to speak. But eventually the expectation is the property market will stabilize and keep going up.
Yeah, absolutely. And then sort of the view on mortgage rates, have you got any view on the sort of mortgage rates and what way you see that going?
Indeed. So as we touched upon earlier, we're never going to see zero rate environments back again, I don't think, in our lifetimes. We have had 40-year lows for such a long time, and that market is now gone. Inflation has been managed, but it's not low enough that we kind of feel like Bank of England is going to cut rates in a hurry anytime soon. So the economy is kind of being resilient. So now we are expecting maybe 1-2 rate decreases this year, if that, and nobody knows for sure. So yeah, it'll take some time to stabilize, but we expect the mortgage rates to stabilize slightly along with the swap rates, which are what the drivers of the rates are. And we expect them to stabilize probably towards the back end of this year and early next year.
Okay. And then in terms of the future, where do you see your business and the housing market move in the next 5 years?
Sure. So yeah, like I said, we aim to bring a lot of products for different people, so to speak. And we're working on a product that will make it easy at the same place to find a property and finance it. So we're excited about that product alongside some primary products that we are offering on the lending side as well eventually. So the idea is we have a suite of products available, all innovative to kind of suit the needs of the right people. And we're excited about that technological innovation that we're going to bring to the market. Hopefully we'll make it easier, cheaper, and faster to kind of finance these properties and make it simpler to find them, so to speak. So yeah, very excited about the products we are bringing out, and please watch this space.
Excellent.
And in the answer to your second question about house prices over 5 years, what we always find is after a period of long-term inflation like we've had, asset prices always increase typically. Now, the property market has been weak because of the mortgage rates. But if you go to your grocery store or anywhere else, the cost of materials, everything has risen a lot in the last, since the pandemic, let's say, last few years. So eventually we feel the property market will catch up. And over 5 years for sure, we feel that it's going to be probably, if I were to make a bold prediction, I would say it's going to increase at a higher than 5% annual increase we're used to for the last 50 years. So over a 5 to 10 year period, UK property never has really lost value in the past. Not to say it'll never happen, but chances are it'll probably catch up with the inflation that we have seen in other areas. And over 5 years, it'll be pretty resilient, particularly when the mortgage rates stabilize and the pent-up demand hits the market.
Excellent. Well, it's been really, really insightful, obviously speaking with you both today and finding out about Pauzible and the exciting new products that you're bringing to the market. Just explain for me how, a typical case. So I am a landlord or homeowner, and I ring you guys. Talk me through the steps from introduction to solution, how that would work if people want to get in touch with you.
Yeah, great question. So if I were to just give an example, to keep numbers simple, let's just take somebody has 100,000 property and they have 50,000 mortgage against it. So technically they have 50,000 equity in there.
Yeah.
And what we can do is essentially cash in on 10% of that home value in very short order, within 2 weeks, so to speak. So £10,000 they can access from the 100,000 house they have, and they can choose whether to be paid over a period of 2 years or 5 years, depending on the mortgage and the views on how the markets will evolve. They don't pay us back monthly payments because there's no interest to pay. At the same time, they have full flexibility to buy back our share whenever they feel in the next 5 years. So whether they remortgage or decide to sell the house eventually, or whatever the case may be, they can buy it back for 15% of the property value. So we've helped them access 10% of today's house value. Whenever they wish to buy it back from us, they'll pay 15% of the value. And they still keep 85% of the home value and any property future appreciation as well. So with that way, we feel like that's a quick and easy way to access that equity they've built in without expensive bridge loan-like payments and so on and so forth. And at the same time, they have full flexibility to buy it back when they feel like their finances are better. As you know, the rental rates have been going up 29% for the Zoopla market since 2020.
Yeah.
So eventually, we expect the rent to go up, property prices to go up, mortgage rates to come down. And whenever they feel they're in a better place, they can buy us out.
Okay, brilliant. Okay, fantastic. Well, landlords, I think this is quite an exciting product that's coming to the market, and certainly the guys are on hand to answer any questions. The best way that you can get in touch with them, Rajesh, if you could just point us to the website.
I would love to talk to you first of all. I mean, all your situations will be different. Discovering what solution is best for you. So I'd invite you to go to our website, www.pauzible.com.